Good Monday morning, everyone. We are back on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. Hey, Jim, good to see you.
Good to see you. Thank you.
Did you have a nice week?
Yeah, back from Italy. My wife bought a house there, and beautiful place outside of Florence, and she's done a lot of work. She's gone over many times. A lot of it is just to make it so that I can get to a place where there's no cell phone, and I was able to do some pieces for real money, of course, but Italy's a remarkable place, and we did a lot of things. We went to Florence and to the Duomo. Everyone has to do that. We went to San Gimignano, which is a remarkable town that has a fantastic tower. We cooked at Rufino, which is an excellent winery. We own Constellation Brands for Action Alert. We made ravioli. That was fantastic. Had some terrific small plate Italian food delivered on an olive. This is a famous sandwich place. I'm trying to give you some of the highlights. We have my wife doesn't like me to call it Olive Garden. She says it's too Jordan, but we have two producing olive groves that we had to cut back that we're doing. We have to rent the place out a lot because there is a considerable cost to it. Had to build a new road, met with the agronomo. Italy has very powerful government where we are, which is in the commune of Montespertoli, which is a famous commune for being strict. But Tuscany is a place that I want people to go to, and there's several ways to go. I think the most exciting way to go is to go through actually agro-tourism, where you stay at a place that is a vineyard that happens to have a house on it, and you can look at a lot of these, a lot of the big, it's not just Airbnb, but the higher ends have it. But Tuscany's remarkable. The people are fantastic. There's a very big election March 4th, and I know that there are people who are trying to say, listen, this is going to be a fundamental election about immigration. This is not my strong suit. My strong suit is the wonderful people and the fabulous food, the under the Tuscan sky, and you come back and you feel very, very rejuvenated. And I wanted to thank Lisa for doing a remarkable job turning a okay place into a true home.
Well, we're so glad you're back.
Thank you.
So many market topics to discuss.
Sure,
a lot
go.
to unpack in that Warren Buffett interview on CNBC. What were your takeaways?
Okay, let's go over some of them, and I think each one's discrete. First, he doesn't say stocks are expensive, but at the same time, he hasn't been able to find a $100 billion acquisition needle mover. I think that's important because while he says that he wants to buy something, he's not finding anything. Does that mean, therefore, he doesn't like the market? Well, he did say he likes Apple and has been buying Apple. I think it's very interesting to hear that he is the person who is the own, don't trade Apple person out there. I do think it's his largest position now. I do think it's got to take out its hype for these technicians to get excited about it. I know Bruce Kamich has a nice chart today on. He does great chart work. But what he liked about Apple, I thought, was very significant. It's a consumer products story. This is what I've been saying, that it's the great razor blade story. When you have 30% increase in your installed base, those are people who take the service revenues and pay them. It's not big enough yet to matter. One day when it crosses over, the stock's multiple will go from 13, 14 to something more like what a Procter would have at 2021. So that's takeaway one. Takeaway number two had a lot to do with GE. We'll speak to that in our later video, our Action Alerts video. But Warren Buffett admitted, it's in the footnotes, and you have to go all the way back in the K, in the 47-page area, where he talks about how his company underestimated the exposure that for long-term care. They took a big premium, the biggest ever, from AIG to get rid of or capping AIG's exposure to long-term care. And it wasn't enough. And to hear Warren Buffett admit that even just slightly more than a year later that he misjudged tells you exactly how GE must be feeling, given the fact that GE has long-term care exposure from when it got rid of a particular insurance unit but kept that on their books. Very, very negative. He talked about owning an airline. I thought that was more of a throwaway. I think he does own a railroad. He does like rails, and the railroads have all concomitantly traded up. That makes a lot of sense. The rails remain cheap. Commerce is good. Remember, the commerce in America is strong. A lot of that is tax code. He talked about the tax code. I think what he basically, I know my friend Joe Kernan was trying to get him to say, listen, aren't we better off with it? I think that he avoided that studiously, but he certainly was able to turn more of a profit than we thought. Excellent interview by Becky Quick on that particular point. More points out of the Buffett interview. I think that he made a point, and I know a lot of our viewers may disagree with this, that the VIX is not an asset, and that the people who lost money were people who were gambling. There's an article today about margin debt in the Wall Street Journal. A lot of people are pointing about that to maybe a market top. Now, here's my problem with that. What Buffett is saying is there were a lot of people doing a strategy that really wasn't a strategy, and that's where the debt came in. It wouldn't surprise me to see margin debt drop or level off. Not a good reason to sell the market. Yes, a good reason to stop fooling around with the VIX and these strategies. Now, I think that there are people who have made money in this and people who have lost money. What he said is basically, I felt that the public needs to be protected from them. That is something I entirely agree with. By the way, in the letter, which wasn't that stressed that much, he does talk about the notion of these managers who want alpha and beta, and they should just stop it already. They trade too much. Just owning his stock has been great. Now, bonds, a significant point he made, brought about 840 in the interview. He said that a 2.4 to 2.9% jump, even though on an absolute basis that's a lot for the 10-year, is not going to hurt the stock market. A 4 to 5% 10-year would, and 15% for those of us who remember the 30-year obviously would be cataclysmic. He's not saying any of that. I took great comfort from the idea 2.4 to 2.9 is not enough to derail anything when you have return on equity of companies that is north of 10 and actually getting better. That was just a significant point because I know there are a lot of people who freak out every time the 10-year ticks higher. Morgan Stanley, by the way, saying that maybe we've seen the top in that. It was not, I think, a takeaway that can be missed. Why? Because there's too many people who are trading in and out of the market based on that. I have said and mentioned many times in Real Money last week that the VIX is the culprit and that the VIX moves have presaged every single one of these intraday moves. I developed a thesis while I was away that we are in a 2 to 3 session market. The old days it used to be one session. Now we have intraday sessions. That's important for anyone trying to commit capital. If you want to do a lot of buying, why don't you wait for the session within the day that's not a strong one?
All right, it's good advice there. Buffett also said he'd never bet against Amazon. That's a new holding of Action Alerts
Yes,
Plus.
and we have been waiting to be able to, look, I make no bones about this. We have severe restrictions. But one of the reasons why we turned it into a club is we felt that we could become better club advisors than we can necessarily individual stock pickers, rather give you a recommendation list, because we've been trying to buy Amazon for 1,500 points. That's a rather staggering statistic. It wasn't until I was away from both Mad Money and Squawk on the Street Mad Money because of the Olympics, that we were able to buy it, even though we were telling club members, look, this is a very important recommendation for us. Happened to go by Whole Foods last night. Obviously, this 5% Visa card, we get 5% back Prime. It just still one more integration. People have been saying, when are they going to start to integrate? That integration is happening now. More importantly, Amazon. Let's say, what are the reasons why? Well, let's go over them for a second. Amazon Web Services, the dominant cloud business in the world today. Amazon Prime may be the dominant retail business, represents still only 4% of retail, and increasingly Amazon advertising, which is a kicker. Is Amazon stock cheap? We sold some Alphabet stock because we felt that Alphabet, while the stock is cheaper certainly than Amazon, has really kind of become a company that we feel is a little too smug. That can obviously change if they change the narrative there. And we also had to trim Facebook, which had gotten too big. No real, I'd say, indictment of Facebook, because remember, Instagram has suddenly out of nowhere been able to take a huge leap on Snap, given the fact that Snap radically redesigned its, my youngest daughter said, are they kidding me? How bad it is. So, and we also, we don't like to sell winners unless they're, of course, too high, too much of a percentage of our portfolio to fund other winners. We like to sell losers, and I will address that in our exclusive video for people who are members of ActionAlertsPlus.com, which I will do after this.
Yes. Meanwhile, Jim, we have Salesforce earnings this week. You mentioned the cloud earlier. Any advice for investors ahead of the quarter?
Well, look, I've been a backer of Salesforce now since 2008 when it was low. And after many go-rounds, frankly, with Mark Benioff, the CEO, and this OpCo call this week was basically saying, buy the stock ahead of the 228 report. Now, one of the things that's happened repeatedly with Salesforce is it reports, it's a beautiful number, the stock soars, and then profit takers come in. The OpCo note made it sound like that perhaps this time will be different. My take is that Salesforce is an own. It's an own stock. One of the big misses we've had for Action Alert is just we should just be owning it. A lot of it has to do with the fact we talk about it constantly. A lot of it has to do with the fact that we have other cloud plays. You don't want to be just in the cloud, but I do feel Mark Benioff it could conceivably have a breakout quarter here. Not that the others haven't breakout, but this one may lead to a further appreciation in price.
frequent guest on Mad Money, Mark Benioff.
Probably the most of any.
Meanwhile, Jim, you mentioned rates on the 10-year yield or 10-year bond earlier. We have Jay Powell on Capitol Hill on Tuesday. Any expectations from
I'm
you?
glad you asked about that, Scott, because I think that will happen is I've known Jay for as long as Jay's been Jay, not Shiro. And I feel that what people are missing about him is that while he may be a new hand, he is a banker. He did very well last week. I think that if there are people who are going to find fault with the way that he says things, my suggestion is to stop finding fault and find ways to buy. This man will be a steady hand on the tiller. I was going back and forth with my friend Matt Horween, who writes with me. Both very impressed right right out of the chute here with this man. And obviously Congress is difficult. He'll have Elizabeth Warren talking. Elizabeth Warren's a provocative senator. We have to see how he handles that. But overall, I'm quite, let's say, so far impressed with what Mr. Powell has done. And again, I do know him for quite a long time and was thrilled for his elevation.
And Jim, we're looking forward to the return of Mad Money tonight.
Yes.
Who do you have coming up?
We have NovaCure. This is a small $2 billion company. Why is it important? As a novel way to treat cancer, I first got interested in it because a late friend of mine got several more years of life from using the device, which at that point was like carrying a battery. It's still it's a bit of a headdress. It works against his sad injury, a sad illness that he had was brain cancer. They're offering it for a lot of other cancers. There's a lot of tests. The company's growing its revenues rather remarkably. Medicare's not gotten behind it, but a lot of the private payer companies have. I find it intriguing because I find, and I don't want to give false hope, the numbers are not so, well, it's a cure, it's maintenance. What you kind of, and I want to discuss this with Mr. Doyle as executive chairman, is the goal to have maintenance until you get cure from, say, CAR T. But it is a remarkable device. I've seen it in action, and we got to talk about it.
Okay, that's tonight, 6 p.m. Eastern on Mad Money. Jim, you and I are going to continue the conversation on actionalertsplus.com. Please join us there.